Welcome back to the show. I'm your host, Ankur Patel, and today I have two very special guests, Jonathon Allen, the president of Wescom Financial Services, and Joseph Pellissery, the CIO and head of technology. Welcome to the show.
Thank you.
Thank you, Ankur.
Jonathon, let me turn over to you first. Could you just give a brief snapshot of what you do at Wescom Financial Services and how that is related to Wescom Credit Union?
Yes. Well, good to meet you, and thank you for having Joseph and I today. Joseph and I both serve on the senior executive team for Wescom Credit Union. Wescom is a $6 billion credit union based out of Los Angeles. We have an operations center in Orange County, where Joseph and I are located today. My role with the organization, not only as president of Wescom Financial Services, which is the wealth management arm of Wescom Credit Union, but I also have responsibility for overseeing our property casualty business. We have a personal lines business and have a very compelling insurance agency. And in addition, I oversee the deposit strategy for the credit union as well. I've been with the organization about 7 years now, but those are essentially the three lines of business that I oversee here at Wescom Credit Union.
And Joseph, maybe if you could share what you are normally involved with day to day beyond being on the executive committee.
So I serve as the Chief Information Officer for Wescom. As Jonathon mentioned, I oversee technology. In addition to technology, I also manage payments and digital channels. So those are considered business units of business operations outside of the technology world. In addition, if you may not know this, Ankur, Wescom also has a technology services division called WRG, which is a QSO. In the credit union world, if you're a technology services organization, you're referred to as a credit union services organization. So the name of the QSO is WRG, Wescom Resources Group. Mm-hmm. And WRG serves 105 other credit union clients. And if you consider the asset size of those 105 clients, it's around 148 billion. Yeah. And we serve over 6 million consumers as part of that business. So it's an exciting, never a dull moment here at Wescom and WRG.
Yeah, I think it's an incredible vantage point because you get to see the problems across the space. What are the common threads? What are the common needs? And then how do you serve it, right? So it's almost you're basically solving for an enterprise set of problems, but across the set of credit unions that operate maybe independently of one another, but again, have that shared need. So maybe could we talk about some of the common pain points that historically have been present for credit unions? I imagine they're similar to some that maybe the largest enterprises have. Maybe let's start with that because I'm very curious, given credit unions and how they work, how you go about solving those problems that you highlight here.
That's a very good question. So one of the main problems that we solve for our credit union clients is hosting their core system. So their everyday banking, the deposits, the transactions, the checks, all of that is managed in the core system. It's referred to as the core. Several vendors out there who provide a core system. So we take that responsibility on the WRG services division, where the credit union can then focus on member service. The credit union can focus on solving complex problems for the members. And we manage the day-to-day technology execution for the core. And we also host systems that integrate into the core. So from an enterprise integration, we provide a robust API infrastructure. We have a very strong data foundation. So we take the technology problems out of the credit union, we solve it for them, and we let the credit unions focus on enabling our members and bringing the best credit union experience for all of the members.
I think it's such an incredible value add that you provide because you centralized in some ways the technology function, and you're able to get a much higher quality and probably more cost efficient technology that the credit unions need, and that way they could focus on their core business, right? I think that's exactly where this really fits in.
Right. And a big part of that, Ankur, is trust. Trust with security, trust with stability, trust with the ability to recover, to keep the members' data safe. And in today's day and age, you know how huge of a threat is cybersecurity.
Mm-hmm.
And when we are managing data for these 105 trade unions with over 6 million consumers, we have to absolutely make sure that we keep their data safe. And that trust is what we want to always abide by, right? In addition to that, there's innovation.
Yeah.
Now, these trade unions, depending on the size, may not have the opportunity to invest in new innovation, in AI, in generative AI, machine learning, RPA. So we solve that innovation aspect as well for the trade unions, in addition to maintaining their day-to-day technology operations.
I think that I think that problem is a very hard problem to solve for the innovation piece, right? So if you look at these very large enterprise FIs, they have corporate venture arms, they have innovation scouts, they have entire divisions teams that go and try to stay on top of all the innovation threads, and it's an open problem for them too because there's so much happening. And so if you're a smaller credit union, again, you have the same needs. You want to be aware of what's happening that's coming net new in the market, and then you want to do POCs, you want to get them evaluated so you could bring new vendors in. And I think if you solve it just institution by institution, like credit union by credit union, it would just be a very hard problem. So I think what you're doing and again, the kind of streamlining that evaluation process, I think that's hugely valuable. So maybe switching gears here, you mentioned security. Well, maybe let's dive a little bit more into that. I think common thing that we see is that companies that usually start on-prem historically have moved to either hybrid cloud or more common now is virtual private cloud, building on a hyperscaler like AWS or GCP or Azure. And I think there's been a lot of growing comfort around the use of that in the last 5 years, especially. So when you work with these credit unions, and how do you think about that security aspect? Are these segmented instances on a hyperscaler, or is it a different approach altogether?
That's another great question, Ankur. So we landed on a hybrid cloud approach because we are a credit union, and so if you think about a financial institution like a bank or a credit union, we have a lot of NPI data, which is which needs to be we are audited by the NCUA, we are audited by several other organizations. So to make sure that a member's SSN, date of birth, all of that critical information is safe, we choose to keep all of that data on-prem. And then the analytical aspect of it, where the data is scrubbed, where we could still leverage the power of the cloud, we choose to keep those data sources on the cloud. So we ended up with this hybrid approach. And if you think about for these credit union clients, via the cloud, I mean, they could choose to host their core on Azure or on AWS, but they choose to host their core with us in our data center is because we provide state-of-the-art technology. If you look at our facilities in Anaheim and Phoenix and Pasadena, state-of-the-art, plus the operational support that we provide. It's not that we just host it. We make sure that your systems are maintained, your vulnerabilities, your patches. We also make sure that your operational execution is completed before business resumes in the morning. So we basically provide that end-to-end white glove execution. And then this is also possible because partners like Jonathon are demonstrating that the technology that we are delivering for the organization, Jonathon and leaders like Jonathon are able to then have their organization take advantage of those solutions. And so I can sit here and invest a lot in technology, but if it does not add value for Jonathon and for the business teams, then we have not hit the mark. So I will invite Jonathon now to kind of talk about how he's deriving benefits from the technology investments that we've been making over the past 5 years.
Well, one of the first things, thank you, Joseph. One of the first things I learned from Joseph very early on, we shared this big bank experience, which I think was helpful in sort of setting expectations around what it's going to be like working for a financial cooperative in a firm that, quite honestly, doesn't have the scale of some of these large institutions that we'd worked for. And Joseph has amassed a really strong team of IT professionals of all levels, programmers, folks that are strong with regard to IT architecture, have CRM experience, and really understand even just how to leverage the enterprise data warehouse. And Joseph built a very compelling story for not only the senior leaders, but in turn our board, around when it's appropriate to build something or when it's appropriate to buy something, right? And that's something I learned from Joseph. Are we going to go down the build or are we going to go down the buy approach? And what I learned in the years before Joseph had joined is I was, to a certain extent, shocked at how credit unions had to leverage so many third-party providers. I was not as familiar with use of vendors, if you will, outside of the technology space. And what I think Joseph brought to the table is the ability to really leverage large scale technology providers and expand upon the offering. So what Joseph and team do is they go to the business leaders and help us, jointly build out use cases, help me understand the business a bit, like in particular, in the area of, let's say, workflow automation, right? We're very, unfortunately, still a large paper-based or oriented organization, particularly in the insurance and wealth management space. Insurance, I think, is ripe for disruption because there's still a lot of legacy systems that have not been automated. And we've come a long way in the short time that Joseph and his team have been here, but I think we've seen dramatic improvements with regard to, I'll call it just basic workflow automation. It resulted in many hours of savings and expense reduction, which allows us to really reposition those resources into areas like business development or member experience and things like that. So it wasn't built with the expectation that we were going to do this to reduce headcount. We're not being replaced by robots per se, but really redeploying those resources in other areas. So that's been pretty exciting. I think this is going to sound very basic, but it's uncommon that credit unions in the $5 to $10 billion space have an active CRM that really integrates well across all business lines. We call it MRM, right? Member Relationship Management instead of CRM. And we're a Microsoft Dynamics shop. And there's an example of where Joseph and team have built out a very robust MRM, which allows my teams on the insurance and wealth side to really have a complete 360 view of our member and all the member experiences that have gone on. So that's, we use a term around here called show me, you know me, which is simply a method by which we gain loyalty and trust with our members because we could demonstrate to them that we know them and understand their experiences, where they are in their life stage, where they are in their wealth management cycle, so that we could be better positioned to introduce solutions to them that are appropriate for where they are. And so we use that term a lot. And I think this robust MRM has helped the business lines so that they don't operate in a silo against the overall credit union ecosystem, if you will.
I think what you have with Jonathon, you have with Joseph is incredible, which is this business collaboration on the technology side, so you're enabling one another. And I think that trust that you need to develop with members by having that visibility into what else are they doing across across your organization is really deeply valuable, right? It allows you to cross sell and deliver better experiences, personalize more, given that you have that single view. And it also makes it easier to go and adopt newer technology like generative AI because it has that more complete view. And if you don't have that data house in order, it's very hard to go and innovate because the base isn't that great to begin with. And so I really do appreciate that. And I think one of the things that you mentioned earlier deeply resonates with me. And it's a common misconception, maybe portrayed by mainstream media, that AI or automation is built to replace people's jobs. And I think when you look at jobs, there is going to be task displacement. There's certain tasks that you might do less of because you have more automation there. But people in these roles are deeply meaningful. They are part of your company culture. They know the ins and outs of the organization. They have these deep relationships. So the nature of their role changes in the sense that they might take on newer tasks, but it's not about replacing that individual or that role entirely, right? It's a very very rare phenomenon. But I'm curious now. We turn maybe the conversation over to maybe some of the things on the generative AI space. There's this common question of whether it's technologists that clamor for the adoption of this technology and bring it to the business units and say, "Here, look how cool the technology is. Let's see if we can find ways to go and drive business value." Or is it, Jonathon, maybe perhaps in your camp, from the business side, going to the technology team and technology arm and saying, here are the pain points that I still experience that we maybe haven't automated or that we could improve the experience of our internal employees. What could generative AI or other technologies beyond it, generative AI, how could they help out? So I'm curious how that conversation happens internally within your organization.
It goes both ways, Ankur. And before we get into generative AI, I wanted to touch on what Jonathon alluded to. Before LLMs and ChatGPT and generative AI became reality with NVIDIA chips and everything else, we invested a lot in RPA, which was the known form of AI 10, 15 years ago, right? And based on what Jonathon said, over the years, we've been able to save over 20,000 manual hours, 25,000, I'm counting, using RPA alone.
Yeah.
Okay. And now with generative AI, to touch on your question about who initiates the value and how the value is consumed, of course, as technologists, it's our responsibility to bring the possibilities to the table, where the opportunities are, how a particular technology can be translated into business value. And if you look at the broader ecosystem, every company claims to be an AI company, right? But how do you generate value? So what we did at Wescom is we partnered with Microsoft, right? The Copilot was a very economical approach from a cost perspective to partner with Copilot and Copilot features. And so the first use case that we implemented and that was a POC, right? So bringing the value, showing the opportunity. And I remember this was at a planning session, not even last year, but 2 years ago. And the room was filled with so much energy, Ankur. So the use case that we POC'd there or demoed there was we as a contact center, we get hundreds and thousands of phone calls into the contact center. And the QA process, the quality assurance. So what a certain team does is they listen to the phone calls, and before they listen to the phone calls, they pick samples of phone calls, and then they listen to the phone call and then determine coaching opportunities for the contact center agent. Now, if you think about it, if you pick, let's say, 1,000 sample calls, there's a very high likelihood that out of that 1,000 calls, 400 are already good calls. There's no opportunity for improvement. So now you wasted listening to those 400 calls. And you could have spent your time on the calls that needed
Mm-hmm.
work and improvement. So with generative AI, with the transcripts, the bot filters out all the good calls and only presents the bad calls. And then the QA agent, instead of listening to the phone call, can ask questions. What was the emotion of the call?
Yeah.
Was the member frustrated? So the whole quality assurance process is now disrupted in good ways,
Yeah.
right? Where
Mm-hmm.
they have a lot more time now to focus on coaching, to focus on conversations that would improve the team member experience and that would improve the member experience. So that's one use case. The other things that happen in the contact center is after a call is complete, you're required to pick a drop down box to disposition the call.
Mm-hmm.
And you have to, and it's funny, I've been through so many of these systems. As Jonathan mentioned, I was with a bank for 15 years prior to joining Wescom. And uh, the systems would have these drop downs. And the fun is that in addition to the 20 values that you can select to disposition the call and say this was the call, this is what the call was about, there would be an option called other. and and most of your if you pull a report, you'll have a lot of others and you would not know how to make sense of that call. So what we're doing now is automatically
Mm-hmm.
from the transcript deriving the systemic disposition of the call.
Yeah.
So, and we tested it out and we let the users select a disposition and we compared it to the disposition that's being auto generated. Guess what? There is a high level of precision when the system generates the disposition. So, those are a couple of use cases that we have already implemented with generative AI. And this is just um, a very, very small percentage of the potential
Mm-hmm.
that we have here in our trade union and banking financial institution universe. So we are very excited. And again, when we presented that, Jonathan was super excited. And in the planning session, it's like, when can I have this? And that is what motivates.
Yeah.
That is what motivates technologists. That is what motivates our team and the contact center, the branches, and Jonathan's investment, insurance, wealth management businesses are taking advantage of those generative AI features,
Mm-hmm.
and it's going to take time to perfect
Yep.
these implementations because we don't get it right, as you know. There is a learning process involved. There's a learning process for the team members. There's a learning process for the bot itself. We have to adjust and tweak the models to keep it evolving and make it more precise and predictive. So that is only possible when we all partner together. And I'll let Jonathan chime in on the business side of it.
Just quickly, Ankur, I think Joseph hit it on the head. The other, however, in addition to the technologist providing some of these examples of use cases, I think it's incumbent upon the senior leaders to say, how does that work for my business, and then sort of challenge it back to the folks that are building or presenting the technology to say, okay, well, we really don't need that, but there's a variation of that I think might work for us. And then you start to have this collaborative discussion. So, in wealth management, we don't have the volume of inbound calls. We have sort of a member and team support area. And although we record those calls, it isn't nearly the volume that they're trying to solve for within our contact center. So I started to think about what is the application for a financial advisor delivering advice and have document responsibilities, both for books and records and from a regulatory perspective, and also in thinking about memorializing conversations. I think there's some industry trends that are going, if I have a meeting with Joseph and his family, let's say, to talk about their investment portfolio, what can I present back to Joseph to summarize our discussion and provide valuable advice? And I think there's ways to extract sort of the sentiment of those interactions to further build out compelling value proposition around the relationship, investment advice, understanding that I am listening to what their goals and objectives are. So that's really at the core. And by the way, that applies to the personal lines business as well, which
Yep.
is very consultative as well. So I think that's where I'm sort of thinking next level a little bit about how we could translate some of the inbound call activity and how Joseph is categorizing these for overall quality improvement to really delivering more compelling interactions in a relationship management world, right? So
Yep.
anyway, but I think it is on the leaders to make sure that they're thinking creatively and working with his technology team to find those solutions. So that's all I would add to that.
Yeah, and I think those wins on the business side then help you think through what other areas of the business this could be applied to, right? So it's the first win is really important. You get that, and then it allows you to go and invest more in areas that you already start seeing some traction in. I guess maybe going back a step, you mentioned RPA, Joseph. You mentioned generative AI, particularly Copilot with Microsoft. I'm curious with RPA. It looks like you've gotten some good wins. It's 25,000 hours or so that you're able to save. Where was RPA, or where is RPA really strong? And potentially, what are some of the areas that RPA leaves as open opportunities for, let's say, newer ways of doing automation, potentially using generative AI to go and tackle? So I'm just curious sort of how you frame RPA with some of the newer capabilities that you're seeing.
Another great questions, Ankur. So I consider RPA to be leveraged when a particular set of tasks are repetitive and predictable, right? So it's the same steps. It's manual, and so RPA is a good tool to solve for those. But when you have to infer, and there is predictive nature of inferring the next step. So if step one, step two, step three, step four, if it's all exactly the same repetition, RPA. But if you go through step one, step two, and then you have to deviate to either step six or step seven,
Yeah.
right? Where you have to predict what your next step could be based on patterns, based on LLMs. That is where the more generative AI and the machine learning capabilities are best for. So, and if you want to step back even further, um, even before the RPA journey and the generative AI journey, you want to make sure that you have a very, very robust data strategy.
Mm-hmm.
Because if your data is, when Jonathon talks about the enterprise MRM system, where you have a single 360 view of the member, what's happening behind the scene is we are moving lots and lots of data from like 35 different systems, real time, near real time, batch. There's consistent data movements into the enterprise data warehouse, which is on Snowflake and AWS,
Mm-hmm.
into the Microsoft Dynamics 360 environment.
Yep.
And so having a very good, robust data platform and API strategy is absolutely important, because that's the foundation. Then what you build with on RPA and generative AI and machine learning and everything else. And if you don't have your historical data in place, so I'll give you a machine learning use case. We developed a score called as the churn score. And what that churn score indicates is the probability of a member, or in this case, in our case, a member, but a customer or a consumer, the probability of that consumer leaving your financial institution. And so think about when you come up with that score, there's demographics, there's financial attributes. There are so many different data points that needs to be considered, evaluated, consumed. So having that historical data in your gold, silver versions and making sure it's in the enterprise data warehouse where it can be leveraged for machine learning, it becomes very critical. And now that churn score is available on Jonathon's favorite Member 360 view.
Yeah.
So when a member walks into a branch or a member calls into a contact center, you can have contextual conversation.
Mm-hmm.
If your churn score is in the 90s, immediately the team member is thinking, oh my God, this member could leave our financial institution at any time. So you position your conversation accordingly.
Yeah.
But on the other side, if the churn score is low, then it's a member that has been with the financial industry for a long time. Now you talk about building better lives, you talk about the long-term goals,
Mm-hmm.
whereas the other conversation would be a little different. So those are absolutely important aspects that in my world, to make sure that the foundation for data, the foundation for integration is set in place before you embark on some of these newer capabilities that are being delivered today.
I completely agree with that, and I think one of the things that I'm curious about is so many of these components in TP, right? The data strategy, and then when you think about RPA or generative AI, it's how do you go in and make that available for the different lines of business or different needs of the company at large. When you think about working with as many credit unions as you do, how do you design this strategy and introduce these components, like let's say a member relationship management software? Do you go and release that same version to all the credit unions all at once, or do you have to spend more time working with each of the credit unions in their own distinct ways to get this adoption? Because in the case of RPA, just to give an example, you may need to go and design the different bots that do automation for each credit union on their workflows. And so there is a bit more services down to the credit union level. It wouldn't just be a single SaaS application or SaaS type of application that's just disseminated to all the credit unions all at once.
That's right. So we have not started providing these newer MRM and AI-based solutions to our clients yet, because we want to prove it to ourselves that it works here, demonstrate that it adds business value. Only then we would look at delivering. But WRG has delivered platforms like this in the past. The digital platform that we use at Wescom was a solution that we offered to credit union clients in the past. So there is some commonality between these MRM and AI-based solutions where when you offer it to multiple clients of different sizes, asset sizes, complex, small, medium size, you always need to think about a core solution that is common for all your clients, and then you extend capabilities that can vary depending on the needs of the client. So it's a little bit difficult when it comes to RPA, because a good example is we were spending, or we in the sense, our computer operations department, they were spending a lot of time waking up ATMs. So the ATMs, I don't know, I didn't know this, but ATMs go to sleep after a certain time, certain levels of inactivity.
Mm-hmm.
And so here, our operators could focus on more complex tasks, but they're waking up these ATMs, especially the night shift. It happens a lot. And so with RPA, now it's no longer a problem. The bot wakes up, and it wakes up the ATMs along with itself. So we solve for that problem, right? So in those cases, can we take that bot, the same bot, and deliver that for all of the clients?
Mm-hmm.
Yes, but at the same time, there is a core aspect to it, because you could have an NCR ATM, you could have a Diebold ATM, you could have different manufacturers, different capabilities. So again, with any kind of service that we extend to our clients, we think about first building the core and then keeping versions of the code where we could vary it for all of the clients depending on their needs.
Yeah, in some ways you're like dog fooding some of the new technology, right? It's like an innovation lab, but you actually deliver value to your organization first and foremost. Make sure that there is a way for you to get to right value, and then find ways to efficiently go and scale this up. And I think that will be really interesting because I think the difference between what I would say is like AI software, including RPA, versus traditional software, is AI and machine learning require data and what I would say maybe even company specific or department level specific models. So there's a little bit more, I would say, services work that needs to get done in order to deliver value. Whereas I think with traditional software, one copy, same copy distributed across every single institution. And of course, there's a little bit of a setup, but it's a little bit easier to get value there. And so there's a little bit more of a services component versus traditional software when we look at AI and machine learning. But maybe I guess building on this theme, when you look at whether to buy or build, to Jonathon's point earlier, how much of RPA and how much of maybe some of the newer technology are you deciding to build at like within your own walls with your own engineers, like designing your own bots or designing services directly on a hyperscaler like Copilot with Microsoft versus looking at external vendors like a UiPath for RPA and maybe some of the newer next gen players that are doing more generative AI automation, including in the world of customer support. How much of that is homegrown and built from home versus you work with external vendors?
So right now we are partnering with Microsoft Copilot primarily.
Mhm.
We are also looking at a partnership with AWS as well. And then we are our robotic RPA solution. We have looked at both UiPath and Kofax. And so I would say it, like Jonathon mentioned earlier, it's a lot of partnership with industry experts and vendors. And then we add on the value from our teams based on what is specifically an extension of the standard capability.
Mhm.
So, Copilot is a good example. As I said, it's an economical approach. It right away solves for some of the low hanging fruit use cases for generative AI. But we're also looking at what financial models could we partner with, right,
Yeah.
for the FI space. When it comes to credit risk, when it comes to underwriting in the lending space, in the mortgage universe, similarly for insurance and investments, because it may not make sense for us to build those models
Mhm.
within our FI because there's a lot of work involved in maturing those models, as you know, Ankur.
Yeah.
So I'm looking, I'm always looking for partnerships there to make sure that it's a collective approach. We are gaining as an industry. We're not investing in repetitive work,
Yeah.
and so it's. I look forward to, especially for making sure that the models that are unique to our needs is built with partnerships with Microsoft, AWS, and others in our
Yeah.
space.
No, I think that's great. I mean, because there's going to be so many use cases, especially as you see some value initially with some of the work that you're already doing. There's going to be more demand than any of us realize in terms of possible use cases and opportunities to win. And it's a matter of how do you quickly cover those use cases, not only within your org, as you mentioned earlier, but then also for the credit unions that you serve. Maybe switching over to Jonathan's side of the camp, I think one major piece is even though technology is capable of doing something, there's a whole change management piece, which is how do you get people that are in these roles to adopt the technology and in some cases overcome perhaps some apprehension that they may have around this is new. I don't know if I want to learn it. Is this going to take my job? So how do you kind of maybe think through adoption of some of the new capabilities in a way that you're more likely to have your teams kind of be on the side of adoption versus resistance?
Yeah, that's a that's a really good question. And Ankur, I serve on an industry board as well. the Bank Insurance Securities Association. And in my role there, we have been discussing really actively for the last 4 or 5 years. Um, the industry, financial advisors are somewhat aging out. Right, it's a problem if you think about the generational wealth that's going to transfer over the next few decades.
Mm-hmm.
There aren't enough financial advisors to serve all the individuals that are going to receive the bulk of this wealth, generational wealth that's going to be passed through. And I don't want to misquote the trillions of dollars that are going to be transferred to the next generation, but you line that up with the number of financial professionals that are serving that market, there aren't enough of them. And what's happened is the big wirehouses gave up on home growing that talent. You know, they used to be very active on college campuses and doing recruitment, and you wanted to work for these investment banking firms and wirehouses, but the young talent has moved into other areas and not traditional wealth management roles. At least that's my perspective on this. So how do we solve that here at Wescom? Well, what we do is we try to align some of our more senior advisors that have perhaps been very good around client engagement, but maybe not as strong on the technology side, to potentially bring on an associate or a partner to help them build out areas where they have opportunity. And it's typically around technology. And a lot of smart advisors that have been involved in the business for, let's say, several decades, you know, somebody who's in their mid 50s and maybe became a financial advisor in their late 20s or early 30s, the business hasn't passed them by. They're really strong at what they do. They're strong with client engagement. They're strong with business development. They understand the capital markets. They just don't know how to leverage the technology to really run their practice more efficiently. So we try to introduce team members to them that could help shore that up. And so it's built into our hiring practices as well. I don't believe that you could be successful in this business going forward if you don't have strong foundation in technology. Joseph knows that I also try to challenge myself. I put myself in that camp. I say I'm about a B plus on technology, but I'm constantly having to reinvent and challenge myself to embrace new technologies. And I became sort of not a super user of our own MRM, but I could probably communicate to my colleagues on the senior leadership team, here's how I'm applying my oversight as a senior leader and utilizing the technology that Joseph and team have put forward. So I think a lot of that is leading by example as well. And also pointing out to large work groups, picking your early adopters and your champions and showcasing their capabilities and their experience to the additional team members. But we're a little bit barbelled in terms of our talent, right? We have folks that have been, as I said, maybe 10, 15, 20 years experience. And then we have newer advisors coming in, let's say within the last 3 to 5 years. That's kind of the barbell that I'm referring to. And it's helping to bridge this technology foundation that's necessary on a go-forward basis. So that's kind of how we're doing it. And we're building a lot of doing some hiring from within and training folks, or trying to steal the talent from the competition maybe early on in their journey, their professional journey, before they're, let's say, firmly committed or have long-term retention agreements in place. We'll grab them where they see opportunity to work for a smaller, more nimble firm like Wescom. So I think that's been an effective way for us to really build out a diverse and talented team.
Yeah. Yeah, I mean, I think the demographics piece is huge. I mean, it's definitely true in wealth management. It's also true across insurance. Insurance has been one of those industries where you have really good talent that's been in place for a long time, but that talent will soon retire. And there is just not enough individuals that are also talented enough that have come through it. And I think that's an area where I think if you make the space more tech enabled, it may attract some of the younger generations to lean in, because there be certain aspects of the job, including the client facing nature of it, that might really speak to them, and they might not want to do some of the more, let's say, administrative work, right? That might get in the way. That's essential to do, but potentially might not be as attractive to them. And I think that that software, because it's going to increase human productivity and efficiency, it's going to help us do more with fewer individuals in case we can't close that demographic gap. And so I think that it certainly helps in that decade to come. I think so. These problems are universal across finance and insurance. I'm pretty excited for what technology can deliver. It seems like you have a really great partnership together, the two of you. And then I think what work you're doing with credit unions more broadly is incredible to see. Would love to double click on that on a future conversation here. But I really appreciate both of you being on the call. For the audience that's here, where could they learn more about both of you individually and then Wescom more broadly?
Well, on wescom.org is our URL, and they could click on that. There's also, you'll learn about the history of our credit union, what our presence is within the Southern California and now Central California marketplace. There's also bios on each of the senior leaders as well. So if you click through, you can learn a little bit not only about the credit union history, but the roles and responsibilities for each of the senior leaders. This may appear to be obvious, but perhaps for the other credit union listeners out there, our credit union was founded in technology. We were the old telephone employees credit union, and so I think it's part of our DNA. And I think we're a very technology forward credit union, and folks could learn a little bit about our history and our goals and our vision and our value proposition to our membership in the broader Southern California marketplace. And of course, anybody could ping me on LinkedIn too. I'll be happy to chat. I love this business, and we'll be happy to engage anybody and everybody in terms of a dialogue around the financial services space.
Yeah, what I would add to that, Jonathon, you covered it well. It's that the credit union industry is a very tight industry. So I'm part of a CIO forum, and we exchange a lot of ideas. Uh, uh, I don't remember doing that in my past experience in the FI
Yeah.
space. There's a lot of collaboration, and as Jonathon mentioned, Wescom was established in 1934. We are celebrating our 90-year anniversary this year. And we've always been a front runner in technology, and we value the partnerships like yourself, Ankur, to win together. That's our goal. We want to make sure that we enable each other, we enable our members, we enable our team members, and most importantly, the communities that Jonathon mentioned here in California that we serve. And to close it out, it's been a pleasure being part of this conversation. Thank you for having us. It's good to know you and what you offer, and we look forward to many more conversations in the future.
Thank you, Joseph. Really appreciate that. The pleasure is all mine. Thank you again, Jonathon, as well, for being on the podcast. Wish you both the best.